from where we left. Remember, we are under this topic of public sector accounting. Public sector accounting. For you, you don't have to write it again. Because already you have that topic. Eh? Public sector accounting. Public sector accounting. Public sector accounting. And of course, we looked at part of it whereby we were able to prepare some financial statement. We were able to prepare some financial statement, and we were governed by. Thank you so much, Catherine. We were governed by IPSAS 1. Was it IPSAS 1? IPSAS 1, International Public Sector Accounting Standard 1, which helped us to present the financial statement. That is the balance sheet together with the statement of the financial income statement. Now, today I want us to look at some of the terminology. I gave you one of the assignment was to check the meaning of exchequer. I don't know whether you managed to check that. Now, I want us to look at some of the terminologies used in here, so that at least if the examiner think of bringing you one or two terminology, you will be in a position to respond. So I think we shall start with the first terminology here. It is general fund. The first terminology is general fund. The first terminologies. So we are starting with the first one here as general fund. General fund. So you want us to define that. Say that this is the primary government fund. It is the primary government fund. Full stop. It is established to account for resources devoted to finance. It is established to account for resources devoted to finance the general services which the government want to perform. I'm repeating that. It is the primary government fund. Full stop. It is established to account for resources devoted to finance the general service. Which the government want to perform for its citizen. I repeat the last time that general fund refers to the primary government fund. It is the primary government fund. General fund, primary government fund, full stop. It is established to account for resources devoted to finance the general service which the government unit perform for its citizen. There's some of the services that the government do provide for the citizen, and they are financed from this general fund. They are financed from the general fund for the government. For example, the writings that you usually see, that's a service given to the citizens of a country. And to finance such a project, the government used some fund from maybe an account of the general fund. Then we have excess vote. I want us to know what it means by number 2, excess vote. Excess vote. Excess vote. What it means by excess vote. So for this, you say, this is the expenditure. This is the expenditure of a given ministry over the approved remit. This is the expenditure of a given. This is the expenditure of a given ministry over the approved limit. Expenditure of a given ministry over the approved remit. Over the approved limit. Over the approved limit for the year. Over the approved limit for the year. Over the approved limit for the year. With number 3, encumbrance. I think this was the term that I told you to go and check. Encumbrance. 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 For the encumbrance, you can say that it refers to the restriction. It refers to the restriction placed on fund. It refers to the restriction placed on fund. It refers to the restriction placed on fund. And a commitment accounting placed on fund, and a commitment accounting, and a commitment accounting, to ensure that expenditure by way of commitment, does not exceed available fund. I'm repeating the whole of that. So that you're able to capture it. Saying that encumbrance or encumbrances. It refers to the restriction placed on funds. It refers to the restriction placed on funds, and a commitment accounting restriction placed on funds, and a commitment accounting, to ensure that expenditure by way of commitment, does not exceed available funds. Does not exceed available funds. Then we have vote of account. Vote of account. This one I know you are familiar with. this. So you say that this is an authority granted. This is the authority granted by the National Assembly. This is authority granted by the National Assembly. This is authority granted by the National Assembly for withdrawal. Authority granted by the National Assembly for withdrawal from consolidated fund, for withdrawal from the consolidated fund, not exceeding half of the total allocation. You're saying that vote of account, it is authority granted. It refers to the authority granted by the National Assembly, for withdrawal from the consolidated fund, not exceeding half of the total allocation. So what is the consolidated fund? Let's define consolidated fund. I've heard that term mentioned above there. So consolidated fund. So for the consolidated fund, you said that this is the main fund operated by the government. So the main fund that the government operate is known as consolidated fund. So I think that is it regarding to the terminology used under this topic. Terminologies used under this topic. Are we together? Okay. So I would like us to, I don't know whether I give you this as an assignment or we do it. No, it's good that I give you this as assignment. Just have this as assignment. The difference between public and private entity. You go and look at differences between private and public entities. Use a table. Always, when the examiner asks you of such a question, please remember to use a table. Whereby you'll be having a table with two columns. One column for maybe public sector, the other one for the private sector. Then you give your point. Concurrently. So anytime you are told to differentiate, remember to use a table. Unless otherwise stated by the examiner. So try to go through that. And it will be okay. Now I want us to look at some of the benefits of adopting IPSAS. What are some of the benefits of adopting IPSAS? Why do the public sector go with the IPSAS and not IFRS or IAS? I thought we have three standards. We have IAS, we have IFRS, and then we have this called IPSAS. Why do we adopt? Why do the government sector? See, what are some of the benefits of adopting IPSAS? What are some of the benefits of adopting IPSAS? So for that assignment, I don't know whether you're going to use the separate book that we said. Remember, we said that you should have two books. One for the assignment, or you leave some space. Maybe if you're using a squared book, you can leave like 10 lines, or 8, 10 lines or 8. So let's look at a benefit of adopting IPSAS. What are some of the benefits of adopting IPSAS? Benefit number one, it improves audit of public institutions. That is very true. It improves audit of public institutions. It improves audit of public institutions. Therefore, those financial statements of the public sector, those financial statements of the public sector or public entities, it is people are able, the auditors are able to verify whether they are showing a statement of true affair, a statement of true affair. So the audit in those institutions is carried out accordingly too. Empowerment in consistency, empowerment in consistency in preparing and reporting of financial information. Or improvement, not empowerment, but improvement in consistency. Improvement in consistency, improvement in consistency in preparing and reporting of financial information or financial statement. There's that improvement. There's that improvement. There's that improvement. That's point number 2. Point number 3, you can say that they improve accountability. They improve accountability and transparency. 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 Number four. It improves the reliability of accounts. It improves the reliability of accounts and boosts the confidence of external agencies. It improves the reliability of accounts. It improves the reliability of accounts and boosts the confidence of external agencies, and boost the confidence of external agency. That's point number 4. So you can go and add some few points regarding the benefits of adopting IPSAS. Regarding the benefits of adopting IPSAS. Then let's look at challenges in promoting adoption of IPSAS. Challenges in promoting challenges in promoting adoption of IPSAS. If I say IPSAS, you understand it is the International Public Sector Accounting Standard. There are some of the challenges here. One of the challenge is that different countries have different reporting requirements. That is a challenge. That is a challenge, depending with the framework, the IPSAS framework. So different countries have different reporting requirements. So you might find that some of the financial statements are prepared using different standard. Using different standard. Different countries have different reporting requirements. Number 2, countries have different laws that apply to different government. Countries have different laws that apply to different government entities. Countries have different rules that apply to different government entities. Then we have point number 3, lack of political goodwill. Lack of political goodwill. Lack of political goodwill. Lack of political goodwill. Then there is a challenge in resources. Challenge in resources, system and personnel. Challenge in resources. There is a challenge in resources, system and personnel. Challenge in resources, systems and personnel to implement IPSAS. 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 So I think that is it. That is it. You can go and expound and get more point under that, more point under that, more point under that, more point under that. So I'm just going to mention some of the accounts that are maybe prepared under government entity. I'm just going to mention them. We're not going to write much about them. So one of the account is general account of goods. It's called GAV, general account of goods. Then exchequer account, paymaster general, then appropriation in aid, and then appropriation account. Those are some of the accounts that they may prepare, but for the practice purpose or the practical part, what we are going to major in is the preparation or presentation of the financial statement and also the budget. Now, I want us to go to the next part of the budget. Next part of the budget, whereby we shall learn how to prepare the budget. Confirm whether you have seen the documents shared in the group. Confirm whether you have seen the document. There is a document, an old document shared in the group this morning. Confirm whether you are able to access that document now. Last time we tried, but it was in vain. Are you able to access that document? You can download it and save it somewhere. You save it somewhere. That is the past paper from 2009 to 2015 May. 2015 May. Now you have all the past paper from 2009 to 2023 August. Now you have them. I know you have the link to the other past papers. But the document contain 2009 past paper to 2015 May. Confirm whether you are able to see that document. You can go back to the group and check, because that document we shall use it. Javan has it. Good. I can see everyone has it. Now you can have a heading here. Presentation of budget and actual information. Presentation of budget and actual information. Presentation of budget. This is a subheading. Presentation of budget and actual information. IPSAS 24. That is, we shall be governed by IPSAS 24. IPSAS 24. Presentation of budget and actual information. How do public sector present their budget? How do public sector present their budget? So we have two types of budget. I'll not say three, I'll just say two. Original budget and final budget. Original budget and final budget. So two types of budget, original budget and final budget. We have written that. So the original budget is adjusted. Original budget is adjusted from supplementary budget. I hope you have ever heard of them talking of supplementary budget. Original budget is adjusted from supplementary budget. Original budget is adjusted from supplementary budget. Supplementary budget. Original budget is adjusted from supplementary budget. NB, when you are coming up with the, you are presenting the budget, there's an NB that I would like you to have in your notes. That compare figures in the final budget. Compare figures in the final budget and actual budget. Compare figures in the final budget and actual budget. Compare figures in the final budget and actual budget. I would like you to underline, or using a highlighter, you can highlight final budget and actual budget. The two, highlight them. They are very, very important. The difference will be surplus or deficit. The difference will be surplus or deficit. Remember, when you're coming up with a budget, you must have, first of all, receipts. You must have receipts. You must have something in your account. And then there are some of the sources of those receipts. Some of the sources of those receipts. So that form part of revenue or what you have. And then you have to do something. You have to spend. You have to spend, since the budget is formed so that you're able to serve your country, to serve your citizen very well as a country or as the government. So you need now to spend that money, that you received for the service of the citizen, So our budget will be having two parts. One part for the receipts. We shall list all the receipts, and then payment. You will pay for that for some of the services provided or given to the citizens. You pay. Now the difference, that difference is the one we are saying. It might be either deficit or a surplus. Deficit or a surplus, depending. IPSAS 24, it is a policy. This is a policy which is governing or which is showing us how to prepare or to present this budget. IPSAS 24. Now we are not talking about IPSAS 1. We are talking about IPSAS 24. IPSAS 24. Presentation of budget. Actual budget, comparing with the final budget, and then you get the information. So please note the difference. Please note the difference. Okay, now I want us to look at a question from that past paper that I've given you. There is a question I want us to look at. You can open that question. I want us to look at a question. So open the past paper. I want us to look at May. The question is in May 2014. May 2014, just below. Once you see that, you can screenshot and share with us. Share with us. May 2014, it will be question number, you can look at it, question number 5. May 2014, question number 5. Are we there? Are we there? Okay, I've seen a chart here. I need to look at it. Oh, okay. Sawa. So, as we look at that question, so as the rest goes through that question, I would like to just respond to this call and give you a break of let's say 5 to 6 minutes, and then we shall be back. So that at least our guys will be able to have their time. So by exactly 5:43 or 5:45, we'll be back. The rest should be looking at that question. May 2014, question number 5C. May 2014, question number 5C. That is the question I want us to do. You read it, May 2014. Thank you for reminding us, Noel. Question number 5C. That is the question we are to do. So, yeah, you have read the question. Now need to look at it. Now need to look at it. So I can read through the question again. We are told that this is May 2014, question number 5C. Told that the following summary of receipts and payment was extracted from the records of our Ministry of Finance for fiscal year ended, that is June 2013. We have actual, original budget, and final budget. Actual, original budget, and final budget. Then receipts, taxation. So from tax, they go that. Borrowing, trading activity, aid from international, disposal of assets, other assets, or other receipts. Then we have payment, defense, education, health, housing, others. Required, the statement of comparison of budget, and actual amount for the fiscal year ended 30th June 2013 in accordance with the International Public Sector Accounting Standard 24, presentation of budget information in financial statement. So we are to come up with that comparison, the statement of comparison between the kindly look at what they are telling you, between the actual amount, and they are not telling you of whether you're going to use the original budget column or the final budget for column. But there's something that we said. From there. There's something that we said when we were explaining this. We say that you compare between the actual and final. Therefore, original budget column being there, that is a hot air. You strike through that. Please never compare your budget using original budget. No, you use the actual budget and final budget. Never compare using the original. That original budget, tafadhali, you can strike it through. Even during exams, strike it through so that you don't pick any item from that. So I think we can tackle this question. Always start with the heading. And let's tackle it. This is Ministry of Finance. Ministry of Finance. Ministry of Finance, statement of comparison, just like the way they are told you, statement of comparison, statement of comparison, statement of comparison of budget and the actual amount of budget, and actual amount of budget and actual amount, budget and actual amount of budget and actual amount of budget and actual amount. This is very nice. Of budget and actual amount for the fiscal year ended 30th June. For the fiscal year, ended 30th of June 2014. 2013. Good. Having the heading, you can maybe underline it. Scare the examiner. Underline it. And then remember now we need to have the actuals and the final. Therefore, those are two columns. And then we can either have a surplus or a deficit. The difference between the actual and the final can either have a deficit or a surplus. So that's another column. And then we have the column for the details or description. So how many columns in total? How many columns in total are we going to have? How many columns? Okay, itantobia tano. No, you're going to have, remember, strike through original budget tafadhali. Yo ni hot air. It does not mean anything to us. So strike through that. So we shall be having 4 columns. So the first one is for the details, and then the second one is for the actual, and then we shall be having the other one for the final budget, and then surplus through deficit. Now that will really help us. So leave alone that. I think the first column should be bigger, bigger because of those the list. So here I have actual. So are we having that? With us? 4 column. Details, actual, final, and surplus or deficit. Remember that we have not included, and you should not include the original budget. What we are trying to compare is the final and the actual. That is very important to note. Now, we shall start with the receipts. Of course, our shillings are in thousand. Are they in thousand or million? Billions. Shillings in billion. Not even billion. Shillings are in billion. So you can have them in billion. That is very important. Shillings are in billion. So we can have receipts. receipt, I can see we have the first one is from taxation. So how much did we get from taxation? From taxation, we had 800 billion. 800 billion. Then the final, don't confuse and choose an item in the original budget. Most people do confuse. The final is 1120. 1120. Now there's something I want you to note. If you have a highlighter or a different pen, please note that when you are dealing with the receipt, you take the actual minus the final, and whatever that you get, whether negative or positive, you put it the way it is. So to make it easy for you, when you go to the payment, it is vice versa. We shall see. Now, in our case, what will be the solution? What will be the solution to put under the surplus or deficit column? What will be the solution to put under the deficit or surplus column? Someone. What will be our results? Direct the actual minus final. So 800 minus 1120, unapata ngapi? If you get it as a negative, that means it's a deficit. Okay, so you put it as a negative, the way it is. So tunapata ngapi? Negative 320. Direct. Don't stress yourself. Once you organize this way, don't stress yourself. You go to the next item. We are having borrowing. They had some amount from borrowing. They borrowed 400. And then the final was borrowed 400. Final was how much? 480. 480. Aye. What will be our final result? Very fast. Final result is 80. Sorry, 80, which is a negative. Good. We go to aid from international agencies. Aid from international agencies. I see that we are having I've left trading activity. No worries. Let's first of all finish with the aid. Is 400. Aid is 400, and then on the other side we have, is it 360? 360. 360, and then I've left trading activity. Let me include it here. Trading activity. Under trading activities, we are having 800 and 840. 800 and 840. So for the aid from international agencies, what is the result? Aid from international agencies is 40, which is a positive. Good, 40. And this one is a negative 40. Negative 40, hope you can see that. Then the last one is other. Now we have disposal of assets. Disposal of assets. Disposal of assets. So for the disposal of assets, I can see we have 800 again. Have 800. Final 760. 760. So what will be the result? 800 minus this. It is 40, yeah? Which is a positive. 40, yes. Then others. Other receipts. Other receipts, we have 200 and 280. 200 and 280. So this will be a negative 80. Negative 80. Regarding the receipts, are we together up to this point? Regarding the receipts, are we together? Regarding the receipts, are we together? Regarding the receipts, before we go to the payment. So simply that is the way you go about it. That is the way you go about it. but we can now get the total. Can now get the total. Can now get the total here. Total receipts. For the first one, give me the total here. Here. Ya kwanza ni ngapi? Then we shall go to the payment. Kwanza ni ngapi? You add all this. All total receipts, total revenues, same. Ya kwanza. At 400, the first one will be given at 400. Thank you so much. The second one tunapata ngapi? Ya pili tunapata ngapi? $11.20, $4.80, $3.60, $8.40, $7.60, $2.80 total of $38.40. And then anyone who use this method, you can give me this minus this. The way we did that, this minus this will give you the result here. The same must lie if we do this one. So ningapi? Chenye unanipea, it is either you have done that 400 minus that 840, or you have done the summation of this 440, which is a negative. Thank you so much. That is the way you are supposed to do receipt. Now, as we know, the direction of receipt is different from that of the payment. So whatever that we were doing here, when we come to the payment, we reverse it. So if we get a negative under our payment, tafadhali get this. If you get a negative, like the way we got a negative here, if it's a payment, we write it down as a positive, but you must have alleged your would not that clear. Okay, let me look at it. Yeah. So okay. Is it better now? Is it better? I hope it's better. I was saying that for the payment, we treat it differently, the opposite of this. So if your payment was 800 and then we had a final budget of this, we could not have written it as a negative. We write it as a positive. If we get a positive, we don't write it as a positive. We write it as a, so the direction of our payment to receipt is this way. Payment ikienda hivi, receipt inaenda hivi. Ni kama asset and liability. Asset and liability hakuna wakati zitapatana. Hakuna wakati zitapatana. Zinaenda different direction. That is the only point that you need to understand when it comes to preparation of budget. Always remember to prepare it starting with the A minus F. AF. Actual and final. Actual. It's good to arrange it this way. It will not give you stress. So let's look at the first payment. And see what we're saying. So we have defense. Now you give me the values here so that I know whether we are together. So who's the value for the defense when it comes to the actual? Defense actual ngapi? Defense action ni ngapi? 800. Final, because don't touch the original. Final ni ngapi? 11. Oh, ni the same. Ya bana. 720, yeah? That confusion najua huwa inakuja. So it's always good to look at the item clearly, right? Now tell me, what will be my result there? Indicating whether negative or positive. What will be my result there? Hapa sasa ndio. Unafaa tu ukishaelewa hivyo, you good to go. What will be the result? What will be the result? 80, which is a negative. Yes, because we are dealing with the payment. Anissa, Abirahim, it is a negative because I can see that the actual was 800 and the final is 720. This is a positive, but it is a payment. It's a payment. We paid, so it took, right? So that will be negative 80. Please note. You are treating the payment opposite of the receipt. We go to the next one. Education. I know by the end of this you shall have known what you're doing. Education. So for the education, we have 1200 and final in gap pay 1200, right? What will be the result? That is simple for us. 0, yes. 0, work and negative, and positive, final effect. We go to help. For example, idea 400. It is also good. 0. Housing. Go to housing. 320. And how much? 360. Give me the final. Give me the final, please. 40, and it should be a positive, right? 40, which is a positive. This is lower compared to this. Therefore, it should be 40, which is a positive. Then we have others. 800 and 760. 800 and 760. So what is our result? What is our result? Or I've left an item. 40, which is negative. 40, which is negative. Yes, it should be negative. That is very good. I think I've not left any item. And then you get the total. The total of all these. Hapa nikiangalia ita cancel. The 40 cancel, so I remain with that 80, which is negative. Negative 80. Give me totals of this. Total payment. Total payment ni ngapi? From that end. Payment, of course, actual. This is my board. Total payment 3520 hapa ama namna gani? 3520 sawa. 3520. What about for the other one? Thank you. For the other one, that is the final budget. 3440. Now you can confirm whether 80 is okay when you take these minus this. And remember these are payment. Is it okay? Is it coming to 80, which is negative? Okay. So always note that when treating the payment, you treat it differently or opposite of the receipt. The receipt direct the way you get. For example, hapa chukua hii mtoe hii, unapata the 20 which is a negative, unaiweka tu ikiwa negative. lakini hapa vice versa. Ukipata negative unaiweka positive. Are we together? Have you understood? Have you understood? Have you understood? Have you understood? Now, thank you. Now you can get whether these they overvalued or they undervalued the budget, whether they overvalued or undervalued the budget, overvalued or undervalued, valued or undervalued. So by taking the total receipt minus total payment. So unachukua hii unatoa hii, hii unatoa hii, hii unatoa hii. So tutapata ngapi? Like hapa naona tutapata kitu kama 520. Is a negative 520. Hapa chini this column or actual column that 400 minus 3520. 400 minus 3520 ni ngapi? 400 minus 3520 ni ngapi? Let's look at that. 120, which is a negative 120. And then 3840 minus 3440. 3440. Hiyo mnapata ngapi? Hiyo mnapata ngapi? This one. 400. 400. 400. 400. 400. And then 440 minus 440 minus 440 minus 80 minus 440 minus 80 minus 440 minus 80 minus 440 minus 80. It will give you minus 520 minus 520 minus 520 minus 520. Good. I'd like us to look at another one. There's another one that was tested in December 2013. The same paper. That's why I say that this paper is very important for us. December 2013. December 2013, question number 5. December 2013, question number 5. Are we there? 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 December 2013, question number 5. That is it 5 boy? 5 boy, right? Ministry of Finance. Oops. I hope you will be able to see that. I hope you'll be able to see that. I hope you'll be able to see that. So why can't you take 5 minutes and try to do it this way, and then we look at it. Is that in order? That in order. If you're having a clear one, I know we don't have another document, but if you zoom it, you'll be able to see. Yeah, you'll be able to see. So you can take some few minutes. So maybe the remaining 8 minutes to get to 620. You finish that, and then we shall be looking at it. Once I get a correct answer from 3 or 4 individuals, that means everyone here. Okay, but that does not mean we shall not do it together. So I would like to see who will be the first one to give us the result. The result that I expect is this. The final. So you give me the final result. Jason, you're saying that December 2013, question number 5. December 2013, question number 5. December 2013, question number 5. Of course, I can see it's 5 pay, 5 boys. 5 boys. So let's take a few minutes and do that question. Someone can screenshot where it is and share in the group. Okay, you can proceed. Topic. So this is December 2013, question number 5. Deck 2013, question number 5. Deck 2013, question number 5. So this is Ministry of Finance. Ministry of Finance. Okay. Ministry of Finance. Ministry of Finance. Statement of comparison. Of budgets and actual amount for the fiscal year, and then 30th of June, it's 2012. Good. We can have a 4-column people. We shall be having actual. Then we have final budget. Then either surplus or list. Surplus or licits. This column should be a bit wide, a little bit wide. 160,000. Wow. You can see people are giving the results here. 116,000. Good. 98, 116,000. Okay. So let's look at it. So I can see that examiner was not that fair. Yeah, he had okay. I can say he was fair. He did not give you the normal budget. He gave you the budget. He named it budget and actual. So it's up to you to know that this budget is the final budget. This budget is the final budget, and then actual, of course, we can see the actual. So revenue from taxes. These are our receipts. Revenue from taxes. Revenue from taxes. When I look at my actual, of course, my shillings were in million. Shillings are in million. 522,000. Shillings are in million. It's always good to indicate this. Shillings are in million. It's always good to indicate that. So 522,000. And then if I look at the budget now, the final budget was 600. Remember, we want to look at whether they overspent or underspent. So this is 600,000. So what would be my result under the surplus to deficit column? What will be the result, class? What will be the result? And our column there. 48,000, which is a negative. 48,000, which is a negative. Then we go to the next item. The next item under these, I can see there was borrowing from national and borrowing from foreign. So borrowing, national. So for the national, the borrowing from national, the actual amount was 380,000. 380,000. And the final was 400,000. 400,000. What is our result here? What is our result here as a surplus or a receipt? The actual budget is 552. It's 552,000. 552, thank you. But I don't know whether Thank you. Did you put that into account to align to this? I hope mwenye amefuatia hii ali put into account kutumia hiyo value. Okay, sawa. Thank you. 380 minus 400 itakuwa ngapi? 380 minus 400 will be 20,000, which is a negative, 20,000. Then we go to foreign. They borrowed from foreign here, and they borrowed 160,000 foreign. 160,000. 160,000. And no. You see the way you can confuse this? See the way? That is not the actual. Once you make that brand up, you get lost. It's 320. 320. 320. This is the 160. So that we put it in that order. Then we go to grants, IMF. IMF walipatiana grants ya 100,000 and then 80. So give me for the foreign. The foreign surplus ni ngapi ama deficit? Foreign, from the foreign toka nje. Is it 40 plus 20? 160, 160 again, 160, which is positive. 160,000, which is positive. What about this? This is 20, which is positive. 20,000, which is positive as well. Then I look at other government agencies. We are having 64,000 and 60,000. So hapa nitakuwa na 4,000, which is is it a positive? I hope it's a positive. Do I have any other? 20,000 is a negative. Or 20,000. 20,000 gani? Receipts tunazienda direct. Receipts. You know, a comment that 20,000 is a negative. Please note the actual amount and the budget, the final. Note that. And then remember what we said, that for the receipts, ukipata negative unaweka negative, ukipata positive unaweka. Lakini sasa kwa payment ndio tofauti. Sasa is 20,000 really a negative class? Is 20,000 really a negative? Should it be a negative? It's no, because remember, these are lists. Don't look at, remember the budget section. The budget section ndio inaanzia hapa. And you should not look at the 80. The 80 minus 100. Hapana, ni 100 minus 80. 100 minus 80. And then we go to the totals and get the total receipts. Total receipts for the actual 160. Hiyo ni 116. Ndio hapa. Specify so that I'm sure of where to indicate that 116. Yeah, column gani? Surplus. The surplus. Okay, 116. Napewa hapa ni 116,000. Wow, there's someone I saw that they gave us that a positive, of course. 141,600. 141,600. 141 in actual. 141,600. And what about the final? The final ni 130, 1300,000. 1300,000. Thank you so much. We can go to the payment. Now. Let's see the expenditure. They paid for education. Sasa ukumbuke sasa we have come to the payment section. Vice versa. If you get a positive, it's a negative. You get a negative, it's a, remember that. The payment, they paid education 536,000 actual. And then 600,000 was the final. So what is the result for that column? Surplus or deficit? Results ni ngapi? Results ni ngapi? 64,000. 64,000. Of course, if I look at this, the actual amount was less compared to the final amount. Therefore, what I expect is a negative. A negative figure and a payment should be written as a positive. 64. Let me look at it again. I've seen 64 something. 64,000. 64,000. It should be written in a positive form. 64,000. Good. We move to the next one. Defense. There was a defense here. And the defense we had 80,000. And we had 120,000. Defense we had 80 and 120,000. Defense we had. Still, I expect a positive there because you can see that the actual amount was lower compared to the final budget. 40,000, right? 40,000. It's being given 40,000. Just direct like that. Government transition plan cost. Government transition plan cost. There is a cost for this transition, and 50,000 is our actual, and then we have the final as 10,000. Final as 10,000. What will be the final result here? 5,000, which is a negative. Good. Once you understand that, you're good to go. Then we move to the health. We have health here. And the health, we had 120 as the actual, 120,000. And then 201. Wow. I expect a positive figure. Give me the positive figure, 81,000. So there's someone who did this, who has already completed that. I hope that is correct. Then we have the internal security norm, housing. Before we go to internal security, we have housing. So housing. So the government is the one who should budget for the housing. That is very good. That is very good. 220,000. And then we have 180,000. 180,000. Already you did it. So negative 40,000. Negative 40,000. Some getting from you people. Then I go to internal security. Yes, the government should provide security. Internal security. I'm having something to do with 300,000. Security is taking a lot. 300,000. Security is taking a lot, and 240. So I expect a negative. Yes, negative 60. 60. You have got this. You got this now. Now what I want you to do is go and teach somebody else. Go and teach somebody else and discuss in the group as well. Here you have 240, 160. 40,000, 160,000. It should be there. 80,000, which is a negative. 80,000. Give me the totals. Is it really visible, or I need to adjust a bit? The total itakuwa ngapi hapa? Totals itakuwa ngapi? Total 15,11,000. 15,11,000. So hapa tuko na 15, 11,000. Hapa 15, 11,000. Let me adjust a bit. 11,000. Hope that my adjustment will work. Okay. Right. This is working. It's working. It's working. My adjustment is working. And that is very good. That is very good. So you got 1,500. Surplus is 0. So here we have 0. So that means this is still 15, 11,000. Is that right? 11,000. 15, 11,000. Thank you. So what does that mean? That we shall be having this minus this. Remember, this is what we are looking. The result. This column is the one that we will be able to see whether they overspent or they underspent. They overspent or they underspent. Now we are having 116,000 from the revenue minus 0. So we shall be having 116,000. Did they overspend or did they underspend? Did they overspend or did they underspend? Depending on the budget. Did they overspend or underspend? Did they underspend? Yes. Thank you so much. You see, they did not finish whatever that they had. Pesa ilibaki mingi, 116 million. 116. So they underspent. They did not spend this amount to the maximum, right? But ile ingine yenye tulikuwa tumefanya. Did they overspend or underspend? Ile walifanya nini? Wali overspend. Now, do you understand how to prepare the budget? Do you understand how to prepare the budget? Do you understand how to prepare the budget or how to come up with the budget? As far as the public sector is concerned, if you are employed in the government entity, you are now able to prepare for them the budgets. Wambie kwamba the original budget does not count. It does not count anywhere. Original budget does not count. We need the final, and then what is the actual budget, and then the final. Actual final. Always note that your arrangement should be actual final, so that you're able to. Otherwise, if you confuse, okay, you can't be. You can state it in the other way, final, actual. But remember now, it here will be opposite. Instead of that, start with the alphabet. Actual, final, AF. When it comes to the budget, start with the actual, final. It will really be easy for you to comprehend. Also, when it comes to exam, it is good to have a format that at least it does not confuse you. When you use actual, final, when it comes to the receipt, you just put the figure, the weight is the difference of the actual and the final. The weight is, if you get it as a negative, put it as a negative. Get it as a positive, you put it as a positive. That will be it. Then when it comes to the payment, it is the vice versa. You get it as a negative, you translate it to a positive because that's a payment. And we want at the end to know whether the amount budgeted, whether it was underspent or overspent. Can see we have some 19 minutes here. I think we can introduce another topic. Is that right? You can introduce another topic. What I expect from you is maximum revision under every topic that we tackle. I need you to make sure that you go through whatever that we tackle before the end of every month. For example, before the end of this month, all the topics that we shall have covered, make sure that you go through them individually, and test yourself. Test yourself whether you are able to comprehend. By the way, if I may ask, how many of us are able to do the assignment that we usually give? How many are able? How many are able? How many are able to do the assignments? You can't be able to do it and then maybe you're not able to share in the group, because I think over the weekend I've not seen any. And there were some assignments that were provided, but I've not seen any, though in the financial management I saw some people did. Make sure that you create time for the assignment. You create time for the assignment. Moving or going an extra mile. Going an extra mile will really help you. So our next topic is analysis of financial statement. Analysis of financial statements. That will be our next topic. Analysis of financial statement. Analysis of financial statement. When we talk of financial statement class, when we talk of financial statement, you understand that we are talking of things to do with the statement of profit or loss, balance sheet, that is a statement of financial position, statement of cash flow, statement of changes in equity. So we can, I think we can mention them. We can mention those components of financial statement, component of financial statements, components of financial statement. One, statement of comprehensive income, that is one, or statement of profit or loss. If bado inaitwa profit stroke loss, our income statement. Then we have statement of financial position, statement of financial position. Hiyo ndio tunaita au tunaita balance sheet before digitalization. Balance sheet mambo inaenda ikikua. Then we have statement of cash flow. Statement of cash flow. Four, statement of changes in equity. Statement of changes in equity. And then number 5, notes to financial statement. Hizi sana sana utaziona, notes to financial statements. So why do you think we should analyze the financial statements? Why do you think we should analyze the financial statement? Why do you think? That's a question I'm posing to you, class. Why do you think we should analyze the financial statement? Why should we? Why should we analyze the financial statement for decision making? Thank you so much. Thank you so much. For a company to make an informed decision, they need to analyze the financial statement they need to analyze the financial statement. So if they want to know the performance, another one from Jackson, to know our current performance and enhance planning and further. That is very good. That is very good. I wish you people pick whatever that our students are giving us, our colleagues are giving us there. You pick those statements. They are very, very good. They are very, very good. During revision, for forecasting, yes, for forecasting, you need to know, this is my current performance. What should I do to improve the current performance, to make sure that at least I perform a little bit better. What do I expect in 10 year time? What do I expect in my company in 10 year time? I can do that by analyzing the current financial statement. I'm able to forecast. I'm able to tell that in 2030, the expected revenue for this company will be this. It's very good. And you put everything in order to make sure that you meet your expectation. So everybody will be on top to make sure that the performance of the company will not decline or will not go down, because we have a goal. We are expecting a revenue of 10 million during the year 2030 in our company. The turnover to be 10 million. To determine the ability of a firm to pay its debt. Yes, Marceline has it. Abbas has it. That is very good. You people, you are bright. Yes, you need to know, is this company able? Are we able to pay our creditors? Are we able to pay our creditors? Those who supply goods to us. Those who supply goods to us. Remember these statements, in most cases you find them published. So that the users of accounting, the users of financial statement may be able to see whether the possession of your company is able to sustain them. Those investors, they need to come and invest with you. Are you able to protect their wealth? That is why we analyze the financial statement. So you'll find that we can analyze the financial statement for maybe 3 years. For example, you can say 3 years back from now. That is 2020, 2021, 2022. Yes, those are complete financial year. If you start your balance sheet or your statement starts from 1st January 2020 to 2022, those are 3 years. We can analyze the financial statement maybe for RCM College for the 3 years and see the performance. Then from the analysis, we can know what we expect from the analysis. The revenue in the year 2020 was 1 million revenue turnover per year. In 2021, it was 1,200,000. In 2022, it was 1,500,000. Our forecast will show us that in the next year, this is 2023, we expect an increase in revenue, because from the previous result, the revenue has been increasing. The same case apply when the revenue is declining. If the revenue has been consistently declining from the previous year, even in the coming years, what do you expect? If you don't improve on your activities, if you don't improve on your operations, do you expect revenue to increase in any way? Do you expect revenue to increase in any way? Of course not. You need to do something to make sure that that revenue will increase. You need to do some changes. So we shall be looking at all those. We shall be looking at all those. Of course, there are some of the methods that we shall be looking or using to help us analyze those financial statements. One of the method is known as common size. Methods used in analysis. Methods used in analysis. So one of the method is common size method. Examiner atakuletea swali ya kwambia using the common size method, analyze the following financial statement. The common size method, another name for the common size method is vertical analysis. So ukipata any of the two terms, know that you are dealing with the same thing. That is one method. Are we together? Good. That is one of the methods. We shall be looking at how it's done using that method. We have method number 2, known as trend analysis. Another name for trend analysis, examiner will give you horizontal method. Using horizontal method, analyze the following financial statement. Hapo anakupatia statement of comprehensive income, ama statement of profit or loss, and then anakupatia the balance sheet. Anakuambia analyze, and then advise. See, your device, then compare between year 2021 and year 2020. Which year did the company made more revenue? Which year did the company made more revenue? Or depending on the finance cost, and also the tax of the company, which year did the company pay more tax? All these we shall be looking at them. So when we talk about trend, or a horizontal, we are looking at the increment. Was there an increase? Was there a reduction in either expense used or the revenue produced? Trend. For instance, if I have year 2021 year and year 2020, of course, examiner will be bringing years like this. Haiwezi kuletea ati hii ikue hapa alafu hapana, analeta hivi ili aweze kuconfuse. So akuja akwambia the revenue for year 2020 was 30,000, and then year 2021 and year 20 was 15,000. Year 2020 was 50,000. Now, can you tell me, using the trend analysis, using the horizontal method, can you tell me what happened to the revenue? Did it increase or did it reduce? What is the percentage of revenue increase or decrease? Can you first of all tell me, did our revenue increase or decrease? This is German Ismail. German Ismail is telling us that the revenue increased together with Peter and Maggie. Of course, you people, you are right. I can see that my base year should be the previous year, not the current year. Please note, examiner atakuletea hii. Lakini it is up to you to note the base year. So when it comes to the trend analysis, what we're talking about is the base year. So the year 2020 was the previous year, and the current year is the 2021. So we have to check what is the trend from 2020 to 2021. What has happened to the revenue? And of course, you people, you are telling us that the revenue increased from year 2020 to year 2021 with how much? What was the increase amount? What was the increase amount? It is, you take 30,000 minus 15,000. That is 15,000. That is 50% increment. Thank you so much. Thank you so much. Not by 100%. Now, if you want to know the percentage increase, you take the increase amount divided by increase amount. Of course, is it 50 or 100? Is it 50 or 100? Let's see. You take the increase amount divide by you take the increase amount divide by, of course I can see is 100%. It increases with 100%. Increase amount divided by the base year. This is our base year. Base year, then you multiply by 100. So this will be 15,000 divided by 15,000 times 100. 100% increase. 100% increase. 100% increase. Anissa, are we together? Anissa, are we together? Anissa, are we together? What's the time, by the way? We can. Okay, we have 2 minutes. But have you understood what is happening to the trend analysis? With the trend analysis, have you understood? That is the trend across, and then we shall be looking at ratio analysis. So once we'll be done with this analysis, we'll be done with that, it will be good for us. It will be good for us. And because our time is up, we can stop at that point. We shall pick it on Thursday. We shall pick from that on Thursday. Make sure that you are doing something from your end, maybe from the previous covered topic. Do something. Device tafadhali. Mapema ndio best. Tuanze mapema ndio best. And then make sure that whatever that you are doing from that end, share in the group. Share. Don't worry what is happening in the group. Just share. Otherwise, thank you so much. Let's wind our class at that point so that we allow those people